Aloha, this is Joshua Hayes at BigWaveTrading.com coming to you with today's market wrap for September 2nd, 2008. Welcome back from Labor Day vacation, huh, everybody? The market gapped open to its high of day and did nothing but sell off for the rest of the day. I've warned you before to never mess with market indexes and downtrends, and today a lot of people got a lesson in chasing stocks. If you bought stocks in the morning with all the euphoria, you paid for it hard today. As the New York Stock Exchange dropped 1%, the NASDAQ almost dropped 1%, dropping 0.77%. The New York Stock Exchange fell 1%, and the Dow Jones Industrial Average fell, as I wait for it to come up, only 0.23%, but the point is it had a major nasty reversal. Now, something that I want to show you which indicates selling is if you look at the volume today, I'm not sure if I have final volume figures in yet, but no matter what, I have a higher volume day than the day before. This tells me that the Dow Jones Industrial Average had a distribution day. Not only that, the New York Stock Exchange had a clear distribution day below the 50-day moving average, and also the NASDAQ, when I can throw this up, can show a clear distribution day. As you can see, it was much heavier than any of the volume of the past 2 to 3 weeks. I'm not sure how long it is, but whatever it is, you can see it was a hard failure at the 200-day moving average. And I assume, unless this market gets extremely choppy, we are about to start our downturn. And how I know about that is I look at some leading stocks like RIM, Research in Motion. It now has the look of a stock topping. Google, of course, has always had that look. Let's go to Apple. Apple shows you that it looks like it's topping. Notice the low volume on the last rally. All the other rallies, it's been the other way. And then the last one I want to show you is Baidu, which looks ripe as can be for a short. Right there with the 50-200-day moving average lined up. And then, but the only problem I see in all these is notice volume. Volume in all of these stocks, like Google, was actually a good day today, but Baidu, RIM was barely over the 50-day moving average, and it even had a small tail right off the 200-day moving average, which makes it an iffy short if you are going to short. And even Apple, if we look at Apple, we can see volume was not above the volume average, and it also found support right at the 200-day moving average. So how do you short this? I'll tell you how. You don't. In a low-volume market, you are not supposed to do anything. I believe all the greatest traders, Jesse Livermore, Gerald Loeb, William O'Neill, have made it clear that when you have low volume like we have had since July, you do nothing. Eventually, you get a great stock like XSI, which I got to tell you what, sure is making this downtrend pretty good for me, as I now have 85% gain in a beautiful chart, one of the few beautiful charts out there. XTLB would be the only other one right now. It looks like NTCT is going to run without us, but I tell you what, I'm going to go over a whole bunch of stocks in part 2. Part 2 is never available for YouTube. It is only available to Gold and Platinum subscribers, so you can look forward to that later on. This one, I just want to prove that you don't fight the downtrend that we've had since October 31st. We've been in nothing but a downtrend, and basically since January have gone sideways. Let me just pick a random date in January and draw it to September. Down a whole 2% in about, what is that, 1, 2, 3, 4, 5, 6, 7 months. 7 months we've gone nowhere with barely a 10% up or a 10% down move. You need 15 to 20% moves to make money in the market, and you need volume. And as you can see, we have no volume. But still, it was clear distribution as volume was heavier than the last day. The NASDAQ got stopped right at the 200-day moving average, keeping its downtrend intact from the November highs to the December top to the June top to the August top. We keep making lower highs. The same way goes for the New York Stock Exchange, which is way worse. From the November top, December top, January highs, we then started a small uptrend on extremely low volume, and that failed on heavier volume. And now after another low volume attempted rally, which just went sideways, which is even worse, and stayed below the 50-day moving average, we now are failing at the 50-day moving average on an increase in volume, as you can see right here with the New York Stock Exchange. Now let's look at the S&P 500 to see how it looked today. and it should have failed too. It was above the 50-day moving average and still not below it. But with this pickup in volume, it looks like we're going to have another failure of the 50-day moving average. The one key thing I wanted to see here was I wanted to see it touch the 200-day moving average to show strength. It couldn't even get there. It can't even get there. That should be a big warning about how weak this market really is underneath. And when you look at the Dow Jones Industrial Average, you see the same thing. Couldn't even come close to touching the 200-day moving average. The NASDAQ was able to do it as it starts to take a bit of a leadership role over the New York Stock Exchange stocks as oil sells off natural gas and all the ag stocks. But as you can see, a quick burst above the 200-day. We're below the 200-day, and now we're caught right with the sticks in between. We got the shaded area covering almost the entire 250-day moving average middle. With that volume spike today, I'm pretty sure that we're going to resolute ourselves to the downside. And there's many charts I have that can prove that. But just one chart I want to show you is an ETF for natural gas. Look at UNG. Look at this thing crater. Since the top in July, when everybody told you oil and natural gas was going to the moon, it has since fallen 46% in around under 2 months. In under 2 months, natural gas has lost 46% in UNG. As you can clearly see the entire way down, we've had red bop, major selling compared to the buying, and on the weekly, look at that. 1, 2, 3, 4, 5, 6, 7, 8 straight weekly bars of negative selling. This is a very ugly chart. They don't get much uglier, but with the big volume surge on this weekly, we can probably put in a short-term bottom pretty quickly. But the bottom line is these were your leaders, UNG, and let's do oil for gas stocks. As you can see, it's falling apart there. Let's just look at one gold stock that was leading, AAUK. As you can see, it's falling apart along with GG and RGLD. It's trying to hang on, but it's about ready to break. And then you just have the indexes, and as you can clearly see with the NASDAQ, we're in a downtrend. With the New York Stock Exchange, we're in a heavy downtrend. With the Dow Jones Industrial Average, we are in a heavy downtrend. Once it pops up, hurry up, there we go. And with the let's look at the small caps. We haven't looked at those because volume doesn't work, but as you can see, unless it can get above this August high, it's going to fail. As you can see, it had a bearish tail today, closed in the lower end of its range, and I'm sure once IBD comes out with its volume, it will show me that it was higher than any of the previous rally days that we've had from July to August. Bottom line, this is an ugly market. I told you to stay out of it, and I told you, if anything, you should be shorting stocks, but there's really nothing to short because there's no heavy volume breakdowns. Today, I finally see some, and I'll go over them in part 2. But for part 1, I just want everyone to understand this market is in a lot of trouble. The NASDAQ looks bad. As you can see it here, failing at the 200-day moving average in a downtrend, about ready to go below the 50. And the NYSE is already bad, remaining under the 50-day moving average. This is Joshua Hayes at BigWaveTrading.com coming to you with the truth. The truth is, do not buy these pullbacks. You'll get suckered in just like everybody else is who's watching CNBC. By the way, I turned CNBC on for 8 seconds, and I saw a person recommend Halliburton, which is a broken chart and broke down heavy today. Today was a heavy breakdown. And this one, National Oil Well, no. Another stock clearly breaking down below the 200-day moving average. And as you all should know by now, I never hold stocks that go below the 200-day moving average on high volume. I don't even hold them if it breaks down on low volume. But if it teeters around it, I'll hold it. But this is a breakdown, clearly a time to get completely out of NAV if you're in it. Do the opposite of what this guy's saying because he's selling into you. Same with Halliburton. It has topped and it's going down. This market is ugly, and that's all there is to it. Once again, Joshua Hayes at BigWaveTrading.com, and I hope you understand to stay out of this market. Thank you very much.